Hi, welcome to this video day, which is on the 17th of January. It's Sunday. Just going to be looking at some USD pairs in this video. We'll go over to the charts in a moment. Now, I did do a video yesterday covering Euro USD and Euro correlated currencies, which you can check out. We are extremely bullish of the USD. Now, the USD, the majority in the market, if you go and check out investment house research or comments online, there is no end to the dollar downtrend. It's universally hated at the moment. In fact, it's most hated since 2011. Now, in 2011, what happened? I'll show you on a chart in a moment, but USD had a big rally. In terms of our favorite trade setups, they are when you get a universal bullish or bearish extreme. Obviously, it's a bearish extreme in the dollar at the moment, and FX positioning is skewed with too many speculators short, and also you've got the big fundamentals changing. The big fundamentals are changing in favor of the USD. It looks a great opportunity for profit. If you're wrong going long the USD, then you're not going to lose too much, but the upside is really, really good. We'll go and look at the pairs now, but just before we do so, please do keep in mind it is my view as of right now. It can, of course, change in line with the market conditions and action. If you want all our trading techniques and our daily technical sentiment analysis of 14 FX pairs, just simply click on the link beneath this video. You'll get live access to our members center. You can also follow us on Facebook, join our Facebook group of traders, and also check out our recommended ECN regulated broker. Now, in terms of understanding why the USD could go significantly higher, we need to look at what is going on in the bond market, okay, and also FX positioning of speculators. So I'm just going to look at some charts in relation to this first, and then we're going to go through the pairs that we really like. Right, let's go. Right, first chart is of US T-note 10-year interest rate future contract. Now, I did cover this yesterday when I did the Euro USD video, but in terms of the USD's direction, this contract is important against all other currencies. Why is it important? For anyone unfamiliar with the bond market, is the cost of US debt, and it gives an indication of where interest rates will go in future. Now, in terms of the T-note, it traded below this one level. Okay, you can see the line there. Been steadily working its higher for several months, and it broke the one level last week. Trade at 111 on a close basis. Now, in terms of the yield on the bond, if you invest in the bond market, that's a pretty decent yield against other bonds around the world. And bond markets are huge. This yield, as it increases, and if it increases further, will be supportive of the USD, because obviously people come in, buy bonds. You have to buy the US dollar to buy the bonds. So we're looking for even more strength in the T-note. We think it could go as high as 1.5. If this contract remains strong and appreciates, it's really going to help the USD. And I just want to go to a comparison chart here. This is the dollar index, okay? So dollar measured against a basket of currencies. And underneath here, we've got the US 10-year note. Now we can see the dollar obviously goes down, then goes into an accelerated downtrend in this channel. Sorry, I just need to line my chart up a little bit better. Okay, so you get the accelerated downtrend, and now you can see the turn, okay? No one is expecting, or the majority are not expecting the USD to go higher, but the majority didn't expect the US 10-year note yield to go up either. When it was in this channel here, everyone said that's a false breakout, it's going to come back. It hasn't come back, has it? Okay, we know yields are going to be supportive of the USD going forward, so we're expecting the dollar to go higher. Okay, now in terms of FX positioning, very important in terms of how short speculators are of the USD. Let me just find my chart that I want. It's this one here. It comes from Citibank, and it's the Citi Pain Index. Again, it's the dollar measured against a basket of currencies, and they note the pain index shows FX funds haven't been this short the USD since the DXY bottom in 2011. See the DXY bottom in 2011 here. Funds extremely short. Dollar reverses, makes a major move to the upside. I think it's about 30%. Funds just as short now. Not really, well, the majority not looking for a dollar rally. I'm not looking for a rally of 30%, but it is going to be sizable on the upside. Okay. In terms of this chart here, it comes from Nordea macro bond, and they say, backing up, yeah, Citibank, its most stretched positioning since 2011. They also note 2007. Just one final chart on positioning in the dollar. This one here. This shows three specific groups, okay? And you can see all recently adding to shorts, with asset managers having, I think it's near enough their biggest short position ever. So you've got a lot of traders bearish the USD, many short at lower levels. We think the market will reverse, so the dollar will reverse, take all those shorts out on stop, which will trigger a major dollar rally. In fact, we think it's already kind of started, and we're looking for more dollar strength. Let's go and take a look at some USD pairs. Just going to use the charts from our member center, look at the USD against some major currencies, and then also the USD against some more minor currencies. USD looks attractive as a buy across the board. Now, I did cover this one in yesterday's video, so I'm only going to cover it very quickly here, but it's a setup that's come to fruition in our view, and we're looking for this setup to play out in other pairs. So what is the setup? Well, we break up above the 118 level here, above this 20-day moving average. And in a strong uptrend, you'll see the moving average trails price. We don't get a touch of it for months. We get up to a new daily high here. And, majority of the market is saying Euro's going to 125, then 127. You could hardly find a USD bull. In fact, I didn't find anyone who was bullish of the USD. But then we break down, come to the 20-day moving average, and we snap it. Okay, try and get back through it, can't. Reject it down again, then basically an indecision candle, then a candle here, which we think is very bearish. Okay, this 20-day moving average lines up with the 122 level, a big round number. Okay, that'll be very hard to take out. In fact, I think we'll see rallies capped by this first level of resistance. Now, if you were coming into this pair, you need to have your stop behind here. If we opened where we were, you still got well over 4 to 1 in terms of risk reward. I think it's probably 5 to 1 if we get to the second target. Okay, so far we're about 180 odd pips in this trade, which is making up for when we broke above 120 and I got stopped out. But yeah, bullish extremes can overrun, and I think we overran there. Now we're going to go down. Speculators just still heavily long. I also think Euro fundamentals have really turned bearish, so looking for some good downside. Now, a setup that hasn't quite come to fruition yet, which I want to look at, is this one. And this is AUD USD. This has been on a huge run to the upside. You can see we break up above 72. Here's the 20-day moving average, my upsloping trend line. You can see we only touch it once and immediately we go up. Now we're sideways. We've struggled to take out 78, okay, on 5 occasions. Market very, very bullish of the Aussie, yet we've come down. We're sitting right at the 20-day moving average and a round number. We're already in, but I will take another trade if we go through the 20-day moving average. I want it to get through 77. Regular viewers though, we treat round numbers as very important. It's where the big order flow is. So I want to get a little bit clear. So I'm going to go 20 pips clear and then see if we run. Now, the majority view is that, commodity prices are strong. That's going to keep the AUD strong. And they say, well, commodities are going up because of the global economic recovery, and we should recover to pre-pandemic levels in terms of growth soon. Commodities have only been strong recently because the dollar has been weak. Speculators have also bought commodities as a proxy against the stock market strength. Yeah, they're speculative bubbles, and I think you can see signs of topping action in many commodities. I think will break lower. I think 72 is a realistic target. The Aussie dollar, as a major, I think it's been the main beneficiary of USD weakness. So I'm looking for a big correction to the downside. And the risk to reward on this one, obviously our targets have got to be hit. Looks really, really good. We shall see. Like all the commodity currencies, short. And here's one. USD CAD or another. Not quite such a smooth downtrend in this pair as the uptrend was in AUD USD. We break the 20-day, come down, break briefly above it, down, try and get through it, can't, down to a new daily low. We bottom out above the 126 level, nice blue. I think that is indicating the USD could go higher. We've touched the 20-day moving average. What I'd like to see is a move above the 128 level, the round number, and these bodies here that are providing resistance. Get through there. Hopefully we'll get up to 132. Again, we're already in, and we will add. Okay, let's move over to some more USD pairs. And this one is, sorry, I need to go back. NZD USD. All commodities, currencies obviously very strong. NZD, look at that. Up we go. Come back briefly to the 20-day moving average here, then reverse back up. New daily high. Down. And then you look, 1, 2, 3, 4 tests of the 20-day moving average. It's holding price, and then down we go on Friday's candle. Okay, so this one I think has confirmed a downside break, and plenty of downside potential in our view. If we get a second target, it'll be 500 pips. Obviously, you can play these trades as they go. There'll be twists and turns along the way. It's not going to be one-way traffic, but yeah, I think the odds now for the Kiwi to continue to the downside. Next pair is not the most volatile pair, but I like to look at this trade setup. It's USD CHF. Come down here to the 88 level. We find support and we push above the 20-day moving average. You can see 20-day moving average providing support, and now we're moving up. If we can break these highs here, we should follow through to the upside on higher volatility. Obviously, market heavily short of the USD. In terms of this pair, I think the speculative short position is the biggest, or near the biggest, in over 10 years. Swiss franc is a very overvalued currency as well. So yeah, good risk to reward in our view. Where should we go next? Another commodity currency, actually, USD NOK, Norwegian krona. Obviously, Norway is Europe's biggest oil exporter, and oil has been pretty firm recently. Yeah, due to dollar weakness, I'm looking for it to break down. You can see this nice downtrend. Only one poke through the 20-day there, double top rejection into it, base, a little bit of nondescript action there, then a nice blue, brings us to the 20. It's a break of 860, and I'm hoping we can get up to 920. So yeah, we shall see if that one comes to fruition. Where should we go next? I've looked at those pairs in yesterday's video. USD MXN, an emerging market currency, very fast moving pair. It has really benefited from USD weakness. Now, it's what we refer to as a weak credit. So if the dollar does do a broad-based rally, it's the weak credits that can be hit the hardest. And I'm looking for the USD to hit the MXN. Kind of choppy action. You get down here, this double bottom, this big blue up, but you can't follow through. Then the red down, blue and a red trying to poke out above the 20-day moving average. Come down on the blue. We open low on the blue, then we firm up a bit. It's choppy. It's sideways. I'm going to go with an add-on to my existing position through the 20-day moving average. A lot of people might say, why don't you let these candles get taken out up here? No, I think that just basically makes the risk a little bit too much. I'm very bullish of the USD. So I come through the level and see if we follow on to the upside. Another emerging market currency that I like, the USD long on, is the Turkish lira. This is a very fast moving pair. Dollar has a good correction. We've got some basing action here. There's the 20-day moving average. We're touching it. Just need to get through those highs. Then looking for a move up to the 8 level. Fast moving pair. Yeah, when you're doing the emerging markets, they tend to be very volatile. Just small positions is enough. Are there any other pairs we want to look at? We'll look at USD ZAR. Looked at this in an individual video as well. We took that 20-day moving average snap there. And, you know, if you look at South Africa, the new COVID strain was coming into play. So we thought that could give the USD some strength, and we do get some strength. Now we get the pullback, but 20-day moving average back here, I don't expect that to get hit. Hopefully now I've said that it doesn't. Looking for a breakout through the triple top, and then a move up to 17. So all the pairs that we just looked at, I think they all look good. I mean, yeah, everyone's going to have their own opinions on which, well, if you're a dollar bull, where the dollar is going to appreciate the most. I've got quite a wide spread on. And yeah, and in terms of USD, just so oversold and looking for, you know, good counter trend action. And we'll see how the pairs go. But yeah, obviously USD bullish. Right, that is the video for today. Thank you very much for watching as per usual. Take care and have a good day.